Hi guys, welcome to the Savvy Money Show with me, your host Sean. Well, for those of you who've been watching my channel, thank you. But you may have noticed a bit of a trend. Stocks I've been picking recently because of risk of inflation, which is here, because of the rise rate risk, and because of people throwing their toys out of the pram about risk of recession. I'm not loading the boat and saying let's get on the ark because we've got to panic over these, but all my stocks have something similar. They're either highly good value stocks, which means low PE or low forward PE stocks. They either have no debt or they have very low debt compared to the cash on hand or the assets on their books. Nano Dimensions is a typical one. IONQ, another typical one. Yeah. Anyway, let's get into it. Today we're talking about a semiconductor stock that very few people are talking about at the moment. It was at $340 not long ago, and it's at $200 now. It has Apple as its biggest customer. Bosch is another big customer for it. And what's so good about it? Well, it's not your typical semiconductor stock. Most semiconductors use quartz. This company uses Mimi semiconductor. Now, that means they're incredibly small. And you see here one on a penny, but they can be even smaller. They can be 0.5 millimeters, which means you can get up to 100,000 on a single wafer. What's the benefit of this? Well, it means you use less power to use the semiconductor as you do with a quartz one. Also means you don't have to mine the quartz to get it, and it also means you need less space. So whenever you turn the phone, it's going to be a Mimi semiconductor that recalibrates the phone. Now, the first thing with that is it's going to be cheaper as a result. Less power, less space, cheaper. Now, it's had 88%. This company's had 88% year-over-year growth, 65% margin. It has 560 million cash on hand. Its total liabilities is only 46 million. It does have a high PE at the moment, which is 126, but it has a forward PE of 54. But remember that. Don't forget to hit that lovely like button, and don't forget the sexy subscribe button. A lot sexier than me, just ask the wife. And if you want to be a hero, hit the bell notification. You'll be notified when a new video gets uploaded. And why not check out the links in the description below. If you're looking for a free trading platform, you get a free share worth up to £200, depending on the platform you use if you deposit a small amount. As I said, has a high PE. Forward PE is comparable with Amazon. So why would you risk it? Well, because it's growing massively. Its debt is less than a tenth of its cash on hand. So it does have risks because 19% of its revenue comes from one customer, but I think it's a good risk to reward long-term play. As you can see here, MIMS stand for electromechanical systems, and It's basically means microscopic, microelectric, mechanical. Now, the most well known is going to be Applied Materials, but we're not looking for the most well known. We're looking for a new company. So, who is this company? Not so new. They've been public since 2019, and of course they were going before then. But it's SITM. Now, as you see there, market cap just above enterprise value by $500 million, but it's the growth of this company that looks attractive. And as you see there, total liabilities 46 million, and the cash there 560 million, just under. I mean, to me, as cars alone have gone from 100 semiconductors, they're saying it's going to need 200 semiconductors, a basic car, within the next couple of years, and that's without full self-driving. Now, everything needs a semiconductor now. I ordered a dryer in December, and I still haven't received it because of the semiconductor shortage, which is crazy. Now, this is something I can see really skyrocketing if you hold it long term. I would like to know if anyone owns it. I do not have a position yet. I am looking to pick up a position. Let me know if you're in it, if you're looking to get in it. A couple of updates. FLGT, I bought to you before it was on Simply Wall Street, and then after Simply Wall Street gave it a $1,000 price tag, and now they've updated it again with a $5,800 price tag. Once it starts going, I think it will keep going. It's incredibly undervalued, in my opinion. I've been banging a drum, and no one seems to be listening. How many genetic testing companies do you know of that have such a low PE, have FDA approval over tests? Okay, they've brought one out already and still not moved over. Don't be asleep over this. Now we have Disney and its earnings today. And the thing about this is I'm excited for this and worried. Mainly because if I'll tell you why I'm worried at the end. Now, two reasons. The first reason, obvious reason, people are going to put too much focus on Disney Plus and not enough on the parks. The parks has always been a cash cow. At the moment, Disney Plus has been sustaining it, while the parks and the cruises haven't been up and running. Now, throughout this, they have had to spend a lot of money for visitors to come back to parks, but Disney Plus has sustained that. Now every day they're putting new content on Disney Plus. It may not be as good, it may not be as big as Netflix, but I have Disney Plus and I think it is amazing. The thing about it is, I think it's the Plus on its own is a $200 stock, worth $200 easy. Nah, if they just spun it off to Apple just for the sake of it. No, you get the parks that have reopened and they sold out last Halloween. You're getting the cruises about to come back up. I don't understand why anyone would go into Carnival when it's going to have 5 to 10 years before it's even going to be making money because of all the debt they've taken on in bad terms. Sorry about that. When you could have such a diverse growth beast like this. Now, I understand people are thinking, oh, we've got better companies. You've got Facebook with forward PE of 15. You know, I'll pick that up. But Facebook is declining, in my opinion. You have Corsair with PE of 15 and forward PE of 11. But I just think this is one that you buy and hold forever. I have this in my kids' account, I have it in my account. If it comes down, I'm going to pick it up again. Now, speaking of Corsair, I do think, and I may be a bit biased, I have a tiny position, not as much as I did have before. I was heavy in Corsair before, but it's still $2 below what I sold for, but they had great earnings in my opinion. The guidance was above analyst expectations, and they went up after hours. And what happened? A short seller has dumped 30,000 shares on the market. Now, they buy these shares to protect themselves because we saw what happened with Snap where it went up 50-60%. And then what's happened is they've got so worried that that's going to happen that they dumped all these shares after market when trading isn't as fluid, and it's just going to tank the stock. So I think that's terrible. I think Corsair has had a terrible time, worse than most, because of Eagle Tree selling shares at the worst time, and the shareholders have been dumped upon time and again. And I just think everyone bigs up AMC and GME shareholders. I think these are the real diamond the ones with diamond hands now. And I think these are such dirty tricks. But I think when these tricks are going on in the market, you're going to get people who are thinking, I'm going to be wary around earnings. If I've got a bit of profit, I'm going to sell out. Anyway, I'd like to know your opinion. Let me know in the comments. Hit the like button. Subscribe if you haven't. Hit the bell notification, and I'll see you in the next video. If you found any of my videos helpful and you want to help me make more, you can support me by buying me a coffee. The link is in the description below.